Listen to me, because this is about your money, your security, and your future. We are talking about the 2026 tax year, and if you are 65 or older, there is a massive change you need to understand right now. I don't want you living in fear of the IRS, and I certainly don't want you leaving money on the table that belongs in your pocket. The biggest problem I see is that most of you are still operating on old information. You're worried that as inflation stays stubborn, your fixed income, your Social Security, your RMDs, is going to be eaten alive by taxes. You're asking yourself, how much can I actually keep? The answer for 2026 is a lot more than you think, but only if you know how to stack these benefits. For the 2026 tax year, the IRS has increased the standard deduction. If you are single, your base amount is $16,100. If you are married filing jointly, it's $32,200. But wait! Because you are 65 or older, you get a bonus from the IRS called the Additional Standard Deduction. For 2026, if you're single or head of household, that's an extra $2,050. If you're married, it's an extra $1,650 per spouse who is 65 plus. But here is the game changer, the One Big Beautiful Bill, OBBBA, that passed recently has introduced a temporary enhanced senior deduction. This is a flat $6,000 deduction for every person 65 or older. If you are a married couple and you are both over 65, that is $12,000 on top of everything else. Let's do the math, because the numbers don't lie. If you are single and over 65, you are looking at a total deduction of $24,150. That is over $24,000 of your income that the federal government cannot touch. If you're a married couple, both over 65, your total deduction is a staggering $47,500. Now, I know what you're thinking, Susie, what's the catch? The catch is the phase out. This new $6,000 bonus starts to disappear if your modified adjusted gross income, MAGI, is over $75,000 for singles or $150,000 for married couples. It reduces by 6 cents for every dollar you go over that limit. If you're making more than $175,000 single or $250,000 married, that specific $6,000 bonus goes to zero. Your actionable takeaway today is this: do not just hand your papers to a tax preparer and hope for the best. You need to look at your 1040 and make sure you are claiming the age 65 or older box and that you are looking for Schedule 1A. That is where the new enhanced deduction lives. If you are right on the edge of those income limits, talk to your financial advisor about managing your RMDs or charitable contributions to keep your income below the phase-out threshold. You have worked too hard and waited too long to let a lack of knowledge cost you your financial freedom. Stand in your truth, understand your numbers, and keep your money where it belongs, with you.